Hello and welcome to Pro Trader Strategies Market Commentary for Monday, March the 13th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Really no economic data here in the United States. Across the pond, all we really got was Italian industrial production. Came in at negative 2.3%, was expected to be a negative 0.6%, so quite a bit lower than expected there, albeit the Italian industrial production is not that major of the European economy, so it's not really going to affect anything whatsoever in the broader markets. And on to crude oil, we got crude oil just down slightly again today. Came down and tried to test this 38% Fibonacci level. Came just shy of that this morning. Kind of looking like it could be forming a bit of a bottom here after the massive sell-off we've seen here in crude oil. Maybe get a dead cat bounces, if you will, after big drop-offs like this on the floor. We used to call them a dead cat bounce, where it kind of bounces up, kind of recovers a little bit before the next big drop happens. So I still see this $45.60 area as a target for this market, but we could easily see a bit of a bounce, fake out, if you will, here in this week, and then see maybe a resumption of the downside going forward. Onto the gold futures /GC. We got them up just slightly on the day. Just kind of taking a pause. Does look like we have that same kind of pattern here, but we've got kind of two opposing candles here that could still signal more downside. I would have to think that it would come down here and at least test this 1183 area, but right now back above that $1,200 psychological support resistance level. So that $1,200 is going to act as support today and until we settle below that line in the sand. Bonds are just off slightly by about a half a point, down 14 points. Again, probably start to see this to consolidate sideways as we head into the FOMC meetings. We're not going to see a whole lot of Fed governors talking now. They're probably in the silent mode. They have to be quiet they can't really talk to the public 2 weeks before that meeting. So we're not going to see anybody really talking or talk about Fed policy, and we could easily see the bonds kind of trickle sideways. Everything's pretty much priced in for that meeting. If they don't surprise it with like a 50 basis point move or something like that, I think they're still going to stay with like a 25 basis point move. Dow Jones Industrial Average off about 43 points right now, below this 9-day moving average. Again, that is acting as support resistance. Anything settling below that would kind of lead us to believe that the bears are in force, at least for the short duration, and the purple is the 50-day. Could look for that as a target on the downside there. Then on the NASDAQ, up just slightly on the day, up 2 points. Bit of a mixed bag with the equities, but the NASDAQ still pushing higher. It's right here, stuck in this upward channel, just moving sideways. Nothing really to be seen since there's no real economic data. I don't really see that changing either. Then we have the E-mini S&Ps right now, just off by about 1%. One point. This is what I was talking about. Mixed bag. We got the NASDAQ up. We got the equities. E-mini S&Ps down. Dow's down. So real mixed bag on the front of the overall equities right now. Sorry, kids home for spring break right now. Then we've got the E-mini S&Ps on a 15-minute or on a 30-minute breakdown. You can see real inside day from Friday's range. We've got this as a Friday's range. We've got this as the inside day, lining up quite nicely. So any trade up into the value area high of the mini S&P would be the short opportunity, and anything below that kind of a longing opportunity, especially on a day like today where it's just kind of quiet and trending sideways. All right, on to a couple things that I've done right here. With Intel Corp, I'm trying to get out of this trade right now for profit. I have on a long put spread that I put on for the long put spread webinar. Got my directionality nicely happening. So really looking to try and cover this for that 50% of my max profit. Ended up doing this trade in the March and bought the 38 puts and then sold the 34 puts to finance that. I ended up originally paying $2. I'm trying to get out for right around $3. Not really happening, but has come down there to exactly where I thought it would. Just kind of migrate, mulling back down to the point of control, which we're getting, just not quite getting that 50% of my max profit. Then on to AMGN. I decided to add a trade around this, which coincides with my ratio call spread that we did just on Friday. So go to protraderstrategies.com, sign up for that because this is a really good one. This ended up working in line with my rules for this trade and did it in the April, and I ended up selling the 195 calls twice for every one of the 190 calls that I bought. So it's kind of like a long call spread, add on a little bit more risk to the upside, help finance that, and I ended up getting a credit of 8 cents for that. So if the market rallies up and settles just below 195, I'm going to be able to keep that full credit. My break even on that is well above 200, so it gives me a lot of wiggle room. And if AMGN continues to trade sideways to down, I get to keep that 8 cent credit, which isn't a whole lot, probably pretty close pays for my commissions on it. But at the end of the day, I have no downside risk with this trade, and I've got a lot of room to the upside to be right. So that followed right in line with the rules for that webinar. And then with ConocoPhillips, I'm pretty bearish on oil right now. I think we're going to see another bit of a drop in there. So I decided to add some short deltas with ConocoPhillips and did a long put spread. So I went into the March and bought the 50 puts and then sold the 41 puts to help finance that. Did that trade for, I paid $4.33 for that. So that fits right in line with those rules around that as well. Looking for ConocoPhillips now that we've gotten below this value area and below the 200-day moving average, which really is starting to act as where the real bears are stepping into this. We get this 9-day crossing over. All of these things are starting to align. I think it's definitely going to go down here and want to test the point of control rather shortly, or at least in the next few weeks. So bought myself a lot of time with this strategy, and because I set it up in line with my rules, so hopefully that works out for there. That's about all I got for you guys. This Friday we're going to be doing the ratio put spread, so it's going to be kind of set up like the call spread, but it won't have any upside risk. So just a bit of a flip on that. Great strategy, especially in markets that are kind of moving sideways, don't really have a directionality, and we get rid of all the risk to one side by adding just a little bit of risk to the side that we are biased towards. All right, so if you can't take that, take it easy.